Solana is cheap, fast, and there's a lot of innovation coming. And we're seeing lots of nice, easy applications for people to use. So, what drives a blockchain use? Well, nice applications, easy use, and cheapness. So it's really, really blowing out all the metrics versus other chains right now, hence why its price outperforms both Bitcoin and Ethereum. So it's been definitely the big breakout of this cycle, and I think it continues because it's getting a lot of traction. It's just a very easy to use chain that's very fast, and a lot of the applications are just very user-friendly.
Real Vision CEO Raoul Pal shared his latest prediction for Solana, suggesting that the popular altcoin is primed to hit all-time highs during this market cycle. Paul reiterated his belief that Solana could emerge like Ethereum from a previous market cycle, indicating its potential for a significant price surge. Summing up his bullish outlook for Solana, Paul suggested that the altcoin could see a substantial surge of 235% to 570% in the coming months, depending on the nature of the market cycle. Drawing parallels with Ethereum's performance over the last cycle, Paul revised Solana's potential price target to around $500 and highlighted the possibility of it reaching as high as $1,000, depending on market momentum. He presented a scenario suggesting a concept of a crypto cycle peaking earlier than traditional four-year cycles, resulting in a shorter bull market phase and a prolonged downturn. According to Paul, this scenario could push Solana's price to a target of $500, and in a more bullish scenario, it could reach $1,000. Paul's growth forecast extends beyond Solana's. Do you think Solana can still give us 10x from the current price? Share your thoughts below. Before we move forward, if you want to stay updated with the latest crypto events and news, you can subscribe to our channel and like this video. Now let's get back to the video where Raoul Pal explains about crypto market in general.
I think Solana grows massively and closes the gap massively with Ethereum. Different chains are used for different things. Ethereum is securer, is probably the chosen one for the finance industry to build on top of, whether it's layer 2s or whatever, because it's very secure, very well battle tested, and very respected and still innovative. Solana seems like it's more for retail application and fast-moving applications. Even maybe a crypto exchanges can build on the new Firedancer part of it because it's super fast. So I think, to extract away for people watching this, I don't really understand this. It's really simple. Bitcoin, Ethereum, Solana, they're all just decentralized businesses selling block space on their blockchain. And different block spaces have different attributes, and they're used for different cases. So Bitcoin is the single most secure. So right now, its main use case is just Bitcoin itself. And it's perfect in that way. Ethereum, DeFi has really been the big thing. And obviously NFTs were very big, but that's also gone to Solana. So valuable transactions, if banks are going to transfer hundreds of gazillions of dollars between each other, Ethereum is likely the chain of choice. $2 trillion to $100 trillion in, let's say, 10 years. That will be the largest, fastest accumulation of wealth in all of human history.
Yeah.
That will be double the 100-year accumulation of wealth of the S&P 500.
Yeah.
So therefore, as an investor, that's the thing to keep in mind. How do I stay in this trade for as long as possible and compound what is the largest? If I go back to anybody and say, would you have bought the NASDAQ in 1990? Everyone would guess. Well, here you've got it, 1990, not 99, 1990. Well, that's where we are now, somewhere in the mid-90s of the NASDAQ.
Yeah, even though the NASDAQ in 2000 corrected by 50%, if you bought it in 1990, you're sitting here in 2024, you're a very happy camper.
Very, very happy camper. Bitcoin was set up to try and replace the government's control over money. And now you're inserting the government as one of the largest buyers of private money. I don't really like that, actually. But it's probably net positive for the crypto price. Now, maybe it pushes private use of money away from Bitcoin if that were the case. Because if the government can manipulate it, they could dump it onto the market, they can buy more, and before you know it, they're using it like they are interest rates and controlling regular money, and we don't want that.
Paul says that by the end of the current cycle, Solana could explode to a price probably north of $1,000, representing a potential gain of at least 604% from the current level. As for whether Solana could overtake Ethereum in terms of market cap, Paul claims that Solana is seeing massive growth and is massively closing the gap with Ethereum. Ethereum's market cap is $318.7 billion, while Solana's is $67.2 billion. He adds that both blockchains are optimized for different segments of the market. Different strings are used for different things. Ethereum is more secure and is probably the one that the financial industry has chosen to build on, whether it's layer 2 or not, because it's very secure, very well battle-tested, well-respected, and always innovative. Solana seems to be aimed more at retail applications and fast-moving applications. Ethereum decentralized finance, DeFi, has really been a big thing, as have non-fungible tokens, NFTs, but they're also moved to Solana. So for value transactions, if banks need to move hundreds of billions of dollars between each other, Ethereum is probably the chain of choice. Solana is meant for a lot of fast transactions. It's the right choice. Last February, Paul made his bold predictions about the cryptocurrency market, predicting that Bitcoin could skyrocket to $250,000. Ethereum could reach between $15,000 and $20,000, while Solana could rise between $750 and $1,000 in the next 18 months. Paul highlighted that Bitcoin and blockchain technology presented a unique opportunity, saying it's an asset that you can own outside of the financial system and it has value. Highlighting issues such as excessive debt and central banks depreciating currencies, he stressed that the average person is increasingly vulnerable. For those feeling the pinch of rising inflation and stagnant wages, Paul believes that digital assets can serve as a hedge against systemic issues plaguing the global economy. His ambitious price targets are based on the continued adoption of digital assets and the benefits of platforms like Solana, known for its fast smart contract network. He argues that cryptocurrencies allow retail investors to participate in a global decentralized financial infrastructure, offering a potential solution to the erosion of wealth caused by traditional financial policies. Paul also made waves in his bold prediction of a significant surge in Bitcoin and the overall cryptocurrency market during the fourth quarter of the presidential election year. Paul described this period as the banana zone, where risk assets like Bitcoin typically experience rallies. The final quarter of an election year is a veritable banana zone for all working people. He noted that election years often involve politicians handing out candy in the form of stimulus packages, leading to higher inflation and thus higher digital asset prices. He also highlighted Solana's trading patterns as an indicator of upcoming market trends, mentioning that Solana's current trading triangle structure suggests a potential uptrend. He believes that cryptocurrency adoption is on an exponential growth trajectory and predicts that the number of users will skyrocket to 4 billion by 2030. Cryptocurrencies are growing at a rate of 137% annually. Using the internet adoption curve as a benchmark, Paul projected that even if cryptocurrency growth were slow to match the post-internet explosion phase, the user base could still reach 1.1 billion by 2025. Extending this trajectory out to 2030, he predicts that roughly half of the projected global population will be involved in the cryptocurrency market. Looking ahead, Paul predicted that the cryptocurrency space could grow from its current market cap of $2 trillion to $100 trillion by 2032 to 2034. Paul reassured investors about the frequent market turbulence, suggesting that 30% drops are typical for cryptocurrencies and often present buying opportunities. People should see these sell-offs as a gift. He argues that the current economic cycle, characterized by falling inflation and rising liquidity, generally favors crypto assets.